of commodities. Manisha is with us in the studio, so let's find out what's making headlines here. Manisha, over to you. What do you have your eye on?
Thank you for that, Survi. I'm looking at the gold prices, and August has been a second straight month of gains coming in for the prices. We are holding above $2,500 an ounce, and it's been a 3% of gain for the month of August coming in for the gold prices. Well, also when you look at the prices, we did see an all-time highs also in the month of August until now. So $2,531 an ounce is what we've seen as an all-time high. From there, as you can see, there's a bit of a profit taking in the Asian markets right now. We're down by $6 or $7, and that's the reason it's come off those 2,500 mark at this point in time. Well, if you look at this year, it has been a very strong one. We started the year with 2,058. We did see it dipping below 2,000 at one point in time in the month of Feb. But since then, it has been a one-way rally, and 25.30 is what we've seen as an all-time high. There have been corrections as the one that we are seeing in the early morning right now, but not too much and not too sharp as well. We have seen prices gain up by 22% in case of this year, and last year was at 12.8%. So we seem to be building up on those kind of gains, especially for gold prices. Interestingly, if you look at the charts since 2017, every year for the month of September, the gold prices have given a correction. So an average correction that you've seen in month of September has been to the tune of 3.5% there. Would be interesting to watch September this time around as well, especially with the US Fed meeting slated for the mid-September, with an expectation that we will be looking at that rate cut coming in. So what the markets are working with right now is a 69% probability of a 25 basis point and a much lower probability of a 50 basis points. And this is exactly the reason that you have seen the gold prices go down on some profit taking there. Well, there are reasons that you are looking at support as well. There's geopolitical tension. The global central bank buying has been quite strong. The dollar at multi-month lows has been supportive. And finally, after 2 years of global ETFs looking at outflows, there are net inflows that we've seen come in for the last couple of months. And then the technological advances also have led to good gold buying. Is the reason most of the banks and brokerages are talking about much higher gold prices from these current levels as well. Citi is talking about $2,500 to $3,000 of a range for the next 12 months there. Citi also feels that the global central bank buying would be stronger, not a record that we've seen in the last couple of years. But even for this year, they're anticipating 940 tons to be bought by central banks. And then you have Wisdom Tree talking about $2,585. JP Morgan talks about $2,500 an ounce an average. And you have Bank of America, Goldman Sachs all talking about $2,700 to $3,000 as well. So we're not done when it comes to all-time highs. The markets do believe that this year and the next as well, gold will continue to be in favor.
All right, Manisha, thank you very much for that. So gold is in focus.